Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we go over the brand new released FOMC.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
We're up 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight. The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity of Dips,
And Hugh Henny.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, November the 2nd, and we just got all the data from the FOMC within the past hour. We're recording this about an hour and a half after it came out. Having a lot of SPY movement, obviously. It seems like every time one of these come out, you see it really pop right after it comes out. And then, you get that 10 minutes and then just completely destroyed. We're down to 376 after it popped to 388, almost 389. So a lot of movement today. You said you had a kind of good day. Do you kind of want to go over what was released, or do you kind of want to go over the reason for the movements and how you played it?
Yeah, so the first way that the ones that I played were NVIDIA, SPY, Tesla, Oxy, Amazon, AMD. And I play them all the same exact way. So I will wait until FOMC comes out and I'll let the dust settle a little bit. But then overall, I play the same setups no matter what. So it really doesn't matter to me after like the rate hike comes out, what exactly happens, because I play the same exact setups. It's kind of like earnings, I won't risk it crazily into earnings, but after earnings, I'm back to trading my normal ways. So with Tesla, with all the ones that I just said, essentially I was looking for the same setup that I always take and a break of that low support. And that's what we got. And my overall, Oxy, I had shorted at 72 and I was looking for 71, ended up covering all at 71.20. That's just pretty much like the same, that's like the setups that like I look for, I keep it like real easy, real breezy. Tesla, same thing. I said that I was looking for, let me find it real quick. Tesla at 232, I said I was looking for a break at 224 to get to 222.50. And, it happened pretty quickly. So, I really don't, I'm not inside the game of sitting there and saying to myself, how far can this go? What can we do? I have the same thing. I set a stop loss, I set a target, and halfway to my target, I cut half. At my target, I cut the rest, and when I cut some, I move my original target up to break even, so that it literally cannot be a losing trade. And that's pretty much how I do everything. And today was just, gave tons of volatility and tons of opportunity. And I capitalized. I probably traded about a month's worth of trades today. And, that's pretty unusual for me, obviously. But the setups are there, and I'm not gonna shy away from it.
All right. So it came out that they hiked them, 75 basis points?
Yeah. Which was the expected. I got clowned a little bit on Twitter, which honestly I was kind of upset because I had said like right before FOMC, I was like, was like, my guess is 0.75. And some guy was like, yo, Hugh, like, I like you, but this is weird. Like, you have no money on the table. I mean, like, you're not risking any money. And you're saying 0.75, which is like the 85% chance that it will be. And I was like, brother, like, that was the point. I don't know. Like, I thought it was funny, but I guess it wasn't. But anyway, with that being said, we raised 0.75, and the 0.75 honestly was pretty bullish. In my opinion, I really didn't know how exactly the market would handle it, but my hunch was that it was gonna be bullish. Now, with that being said, what Powell said was not bullish. And this is like the bullshit that, that always pisses me off with the Fed, because it's always say one thing. And that's like when I get stopped out of trades and stuff, or, it's typically because like some headline comes out with, and it's always a bunch of nonsense. So it usually like really pisses me off, because then they'll come back like a week later and say something completely different. So with Powell, what was it? JP Morgan the other day came out and said the S&P could see a 10% move up. Something like that, I think it was. Yeah, but like, what is that based on? And every time I like comment underneath one of the big media heads, I'm like, hey, like, can you tell me what this is based on? They're always like, it's based on the guys that know finance. I'm like, oh, no, sick. No, great. That makes sense. Yeah, that's great.
It's like that scene on South Park where they spin the wheel and the chicken without the head just decides if it's like a bailout or, the big bang, et cetera, et cetera.
Yeah, exactly. Like that's like, and every time I ask, I get like the same answer. It's like the licensed professionals. And I'm like, all right, well, who the fuck made them, king emperor? So I don't know. It kind of pisses me off when they say these things. And then on top of that, Powell comes out, and the past week, it's like, oh, like, like the Fed is signaling that they're going to pause all this bullshit, by like the end of the year, like not raise rates. And then let me just read you exactly what Powell said. It is premature to be thinking about pausing our rate hikes. We have a ways to go. I'm telling you right now, wait 3 weeks until the next FOMC or whatever it is, until the next, until the next like decision comes out. You're going to see so many rumors of the same nonsense of, oh, like the Fed is thinking about pivoting, it'll be dovish, all this nonsense. And then watch what happens. None of it happens. And then it comes out and it's like, oh no, we're not ready yet. And that's what I'm talking about, is like, that's the shit that like really pisses me off about like the Fed and stuff like that, because it'll move the market 1% or 2%. And then, it'll stop a lot of people out. The next thing we know, it's like, oh no, Powell said a soft landing is still possible. I don't see how that's possible. We've reduced the balance sheet by like 3% since June. I just don't know how that would ever be possible. Like if we're going to actually continue to ease the balance sheet, that it's just not possible, I don't think. So to me, I just like every time that Powell speaks, like I don't even listen anymore, just because it's just always ever changing and it never makes sense. Also, Powell said that the Fed admitted that they will likely overshoot with rate hikes. So this is the other thing, is that it's the same thing. Like they're late to the party on the one end. On the opposite end, they're going to be late to the party with the rate hikes. And what I mean by that is that they're going to come out with these rate hikes and they're going to go overboard. And then they're going to have to switch to dovish and like lower interest rates by like 50, 75 basis points. Like that's not normal. None of this is normal. It's supposed to be like along the lines of like, hey, the economy needs a little bit of a boost. Let's raise 25 basis points. Or the economy needs a little bit of a boost. Let's lower by 25 basis points. Hey, the economy is starting to see inflation. Let's lower by 25 basis points. Like that's how this is supposed to go. Not 75, or a full basis points for months on end. Like that's not what's supposed to happen, because then again, all those lagging indicators that we talk about will catch up eventually. So like unemployment, when they talk about like, a strong labor market, yeah, it's a strong labor market for now. But what happens in 6 to 8 months when the labor market actually feels the rate hikes? Because the labor market's not feeling the rate hikes from right now. That's what I want to understand, is that they're not feeling the labor market. They're not feeling the rate hikes from right now. They'll feel it in 6 to 8 months. So if we keep going down this path of really raising, what ends up happening is that we raise a crap ton, unemployment feels it in 6 to 8 months, and then now we have to switch gears and swing the pendulum back all the way to the other way. And I just don't see how any of this is good for anybody, really. I don't know. It's just not good all around, because again, like a swinging pendulum like that, it just ruins things, and then you just end up nowhere. You just end up going from one place back to another. So, yeah, that's it. That's kind of like my rant on the Fed. But pretty much not much has changed. They still want a soft landing. They still want 2%. They're going to continue to raise rates. Stuff like that. I will say though that this probably changes the 3-month outlook, or it should.
Yeah, that's going to be my my next question for you was how does this change the outlook? I mean, that definitely puts an end to a run that was looking pretty promising.
Yeah. So actually, I had a few questions about this, and I still stick to my game plan for the most part. Now, I will say that this is pretty ugly now, because it'll take a lot for us to get back above 385. That's not going to be easy. And realistically, we should be probably down closer to like 364 within the next 2 to 3 weeks. Because again, this kind of meeting kind of gives the outlook for the next 6 months, I'll say. And again, unless inflation is lowered incredibly, it's not going to happen. Also, with the Fed not pausing rates and saying that we have a long way to go, that's all we really need to know, is that they're signaling to market participants that there's a really long way to go and we got a lot to get there. So I don't know. It's really ugly, honestly. Oh God, it's really ugly. This is really bad in my opinion, because again, is that we've only lowered the balance sheet by about 3%. We haven't done anything. What happens when we actually do need to lower the balance sheet?
And when you say lower the balance sheet, can you kind of expand on that for anyone kind of new listening?
Yeah, so I forget exactly the numbers, but when we talk about and we say that the market, or that the Fed has added more to the balance sheet than ever before inside the history in 20 months, we were always cautious about that alone. But now, at a certain point, they have to lean off that balance sheet. If you guys kind of look at Japan inside the 80s, it's a similar thing, because, the Fed does buy up different vehicles to keep the economy up, but that can be a house of cards if they do too much. And honestly, they admitted that they did too much. So now they need to lessen the balance sheet by lowering 3%. Every time they lower it, it comes down to that simple supply and demand. There's just not enough liquidity inside the market right now. So when they lower the balance sheet, they end up smoking it. And that's something that we got to be really cautious of. I don't know, because they do need to lower it. But it's clear that when they lower it, they literally smoke the market. And they know that too. And I don't see how they can go about doing it any other way, really. I just don't see a way that they could do it. And so they're literally going to smoke the market, I think. I just don't think that they have another choice. It's the same way, they kind of built this house of cards and, had the market get, pushed up super high. Now, what goes up must come down.
All right. Well, kind of pivoting off of this, everything seemed to be going so well until I think it was March was the peak. What exactly caused that hard transition? Was that just right as they started announcing inflation? And why have they just not been able to, go back to what it was before? or at least go back to bullshitting enough to what it was before.
Well, because at a certain point, like inflation gets like you can't like if inflation went above 10%, I don't know. I don't really know what happens.
Like you can't just hide it forever because like then eventually
it's literally like think
out.
of it like a Ponzi scheme. Like eventually you run out of money kind of thing. It's the same thing like this. Like eventually like you can't keep buying. And that's where we're at. Like the Fed can't continue to buy. And so that's really where we're at. They can't. But with that being said, if the next inflation reading is down significantly, then the Fed will be able to pivot a little bit. Like I'm talking like we need to really make some headway on this inflation bit. But if we do make some headway, I think that the Fed will be able to pivot a little bit. Now, personally, I hope that we see 320 before then, because that's an opportunity for me to buy. You know what I mean? Like that's an opportunity for me to buy. That's all I care about. That's that's pretty much it. And again, is that I understand like the whole like midterm pump and stuff, but I mean you can't pump this now. Like there's just no way. You won't be able to pump this. I don't think. Maybe, but I don't think.
Yeah, no, they've got a long ways to go for sure. So one thing I found that I found interesting, we always like to go over different strategies for trading. It's just that we've gone over a good bit. So someone on Twitter, Jordan FT__ trading, saw this on my Explore page. It said, I've tweeted for over 5 years and never shared the strategy once. Take 30 seconds out of your day to learn the strategy that I use as a full-time trader. Said to you, Hugh, I thought it'd be cool if we just read over his thread and go over what you like and what you have questions about and kind of just go through it all and see what you think. How you like that?
Yeah, I like it.
All right, cool. So his first one is, this strategy is based on taking advantage of retail traders. Damn, fucked up. It's called the stop punt trading strategy. Here's what it is. Let's look at QQQ on a smaller time frame, for example. First, I look to identify where a recent high or recent low is. Here we can see a double bottom, which is a great sign for a stop hunt strategy. Like I said, this guy's FT__ trader. I think it's 2 underscores. So if anyone wants to follow along, he does have charts and pictures with it as well. So he sees a double bottom, which is a great sign for a stop hunt strategy. I'll wait for a price to break that low and then look for 3 pieces of criteria for entry: speed, volume, and level. Okay, so thoughts on speed, volume, and level. We're about to get into each of them as well. So after price breaks the low, you want to see it reverse fast. You can see price immediately reverse less than an hour later. Next is volume. You want to see increased volume when price breaks the low or high. Compared to the rest of the day, there's a strong increase in volume here. I know you're a big volume guy. Do you kind of want to explain why you need the increased volume and then why you want to see it reverse as fast as it does?
Well, the increase in volume shows capitulation. And that's what you want to see is kind of like, either bids being filled or people stepping up. Like you want to see buyers there. Because again, it's that the market really just comes down to, supply and demand. So if you see, a ton of volume coming in, and then, quick reverse, that's going to show that buyers are, or other way around, sellers stepping in. And so that's what you really, really want to see. It's just like, it's just one of those things that, like especially when we talk about the market overall, it's capitulation.
All right. And he says, lastly, you want price to move back above the breakout spot. This is key for entry. And then he has another picture. It says, you can see price comes back above the stop hunt level. Price comes back above and holds support at that level. This is when you want to buy. So once it breaks, once it holds above support, that's when you want to buy. You can put a stop under the low that was created and target the next stop hunt level. This strategy works because of 2 reasons. Shorts taking the breakdown trade need to cover their position, and institutions are usually buying up stop losses and driving price the other way. With any trading strategy, make sure to clearly define all your rules, keep an eye out for stop hunts, and see what happens. What are your thoughts on that? And what do you kind of like about the idea about it, taking advantage of the retail traders and the shorts and institutions, et cetera, et cetera?
Yeah. I mean, I'm looking at this thread first off. Great engagement by this guy. great engagement. That's that's something to be proud of. Thousands of likes. The one thing I will say though is that I'm reading through it. So what tweet did you just read? You just read the second one?
Pardon? I just finished the thread.
Yeah, but that's what I mean is that there's you're I'm looking at the second to last picture. You see the second to last picture?
You can see price comes back above the stop hunt level. That one?
Yeah, that one. That's kind of bullshitty to me because on the same token, let's just say that we have a support level or a level that's getting a bunch of volume there. The issue that I have with that is that that could just be buyer stepping in momentarily. Like for me personally, and this is why I always talk about confirmation, I want to see, it's good to see that capitulation and it's good to see buyer step up. But for me, I need to see, the stock or whatever, let's just call it the security, go up, test that area, or, come down, test that area, go back up, come back, test the area again, and then break over the high. Like for me, I wouldn't just be buying something just based on that. You know what I mean? Like I need that confirmation. Or else how do I know that it's just not gonna, maybe there's like a 2-3 candle explosion and then, just get smoked once those bids are filled. That's the only thing for me is that I'm huge into confirmation. And hey, listen, if this works for that guy, great. But for me, I need to see that confirmation.
All right. So how would you recommend making it safe for you? Is there any way to keep playing it while also still being able to see that confirmation that you want to see, like more confirmation for it?
Yeah, I mean, I'm not a huge I don't look at tons of volume and stuff. I don't look at volume like this guy looks at volume, but I'm looking at QQQ. Let's just say that you get a 269 and it breaks below, but then it wicks back up. That's great, and then it goes up to 270 and then comes back down. But I would want to see again is that it just comes back down to 269. Chills there, confirms the support and then breaks back over that 270. That's what I would be looking at, really. It would have less to do with the volume and just more have to do with the price action and what exactly is the stock doing. You going to the Astros game tonight?
No, Philadelphia's kind of far from me.
What about you going Thursday night?
No, okay, so Monday was supposed to be a game, but it got delayed. So it's Tuesday, Wednesday, Thursday in Philly. Friday's a travel day. Saturday, Sunday, Monday, they're in Houston. But they might not even come back if we lose the next 2 fucking games.
Yeah, it sucks because being an Eagles fan and a Philadelphia Phillies fan and a 76ers fan, it's tough because I got a lot of work to do. But recently, with all the ass kicking that we've been giving out, it's been tough to get work done.
I thought you were a Yankees fan.
Well, no, I went to the Yankees games for the vibes.
Okay.
You know what I mean?
Okay.
But no, I mean, I'm a Phillies fan. I went in 2008, I went to one of the games.
Damn, so I guess the allegiance stays strong over the past 14 years.
Oh yeah, naturally. Big Ryan Howard fan. And Cole Hamels fan. And Shane Victorino. He was always a dog. But anyway. Oh yeah, and how can you not like Charles?
I'll be honest. I think I actually fucking hate baseball. Last year I left a World Series game in the 4th or 5th inning.
Did you really?
Yeah, they're like $1,000 seats. But
Jesus,
yeah, no. Whenever
what?
just standing room only seats are like $450.
Oh
It's
my!
expensive as shit. Yeah,
Bro,
World Series
I
aren't
gotta
cheap,
own a
man.
stadium, bro. This shit is ridiculous.
Yeah, well, they also have to win a lot too. But yeah, no, I actually fucking hate baseball. I think it's a shitty excuse for sport. And whenever they had the lockout going on, I was actually kind of pissed that they came back. I was hoping it just would never come back. So, but I'm coming
They just
around a little
canceled
bit.
baseball.
Yeah, I'm coming around a little bit. I did stay at my first full baseball game, but man, dude, that sport is fucking dull.
Would you like to put a little side wager on this?
On the series? Fuck, man.
Yeah.
Yeah, after I just went on a fucking rant about how much I hate baseball.
Well, yeah, but I mean, you're a Houston guy. I'm a South Jersey guy. We could put a little.
What is the wager?
I don't know. I'm not a big gambler, but $50.
We can do a little more than that. We can do like
Oh.
$100.
All
I feel
right.
And
And
wait,
the
but
Texans,
they're up 2-1.
Yeah, so what? So what?
I mean, you're getting
Also-
some good odds, dude.
All right. Also, the Texans played the Eagles on Thursday
yeah.
night.
Okay. First of all, like I actually fuck with football, and so I know like the Texans are absolute dog shit.
Well,
I'm
I'll give you like 5-1 odds.
Oh, okay, I can handle. Is it in Houston or is it?
It's in
Philly?
Houston.
I'll take it.
All right, like
Five. You're giving me 5-1, or you giving me a spread?
All right, I'll give you a spread. What's the spread on the game? Do you know the
I
spread
think
on the
I'd
game?
prefer. I think I'd prefer 5-1.
No.
Because then, like, if they get a good upset, like I'll.
Yeah, that would be. Yeah, that would not.
Yeah,
be
no,
fun.
it'd be nice, dude.
All right, what's the spread on this game right now? Do you know?
Let's see. Texans, Philly.
Oh, bro, they got Eagles +3. Done.
What? I definitely want the 5-1. They're +3. That means
No.
Houston's favored.
Wait, I'm kidding. I just made that up. Wow. Why can't they? Minus 14.
No, I was about to be like, what the fuck is this home field advantage we've got going on down here?
Yeah. All right. I'll take the spread.
All right. I'll take like 14.5. I'll take 13. I can. Yeah. No, I can do 14. So we'll put
No, 13. 13.
13. Okay. So I was
13.
trying to-
No, 13.
All right, so 50 on we'll do 100 on the Astros series, and then 50 on the Texans Philly spread. And if the
Yeah.
editors want to pipe into, they can get on the action.
they
But
can
yeah,
get on
dude.
They can get on the action, but either way, it's coming out of their salary.
Oh yeah, no, regardless.
Yeah.
So at least we got some sports talk at the end.
Did you trade it all today or no?
Yeah. I always like to trade when I was Fed and shit talk because it always does the same thing, dude. Every single time pops up, except for one time whenever it's just completely reversed, but just pops up right after and goes straight down for the rest of the day, dude. It seems
It feels like when
clockwork every
Davey
time.
Day Trader was like, stocks only go up. Why they do?
Yeah, dude, but now they just go down. So, no, but seriously, every time there is a Fed meeting, it really does seem like right after it comes out, pops up a good like 3%, and then it just drops 5%, and all the gains are gone.
Yeah.
I mean, it's done it the past 7 times, omit one. So, I'm gonna keep doing it until it doesn't work. I'm not even risking a crazy amount, so it works out well. And if it ain't broke, don't fix it, I guess.
I like it.
All right, guys. Well, we enjoyed talking to you this Wednesday. You should get this a few hours after the Fed came out or the Fed did their shit. So enjoy and good luck trading the rest of the week. We love you. See you Sunday. Peace.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.